Good afternoon, ladies and gentlemen. This is Brad Matheny. Today is October 11th. I'm doing this special update to highlight what I believe is a market bottom, and I'm going to explain to you why. Right now, there's 2 or 3 critical things taking place on this ES chart that everybody seems to be ignoring, planning on a doom and gloom scenario. Number 1, we have, in fact, let me do this. First thing I'm going to do is highlight and get rid of this and this. And secondarily, first thing I want to highlight is this green channel line right across here, going off of the 2010 highs, across here the 2011 highs, and across 2016-15 highs, and how that coalesces right now at the 35-32 area, right in this lower channel of this blue box. This blue box is being drawn off of the gap in volume here at the volume at price area near the 3500 area to the 3629 area. And this is very important because this gap in volume represents price accelerating through this area and then real momentum, real accumulation starting to take place over here. We're now down in this area, this volume gap. I believe we're starting to form a very solid bottom here moving into earnings. Secondarily, we've had a wave 1, 2, and then 2 forms into an A, B, C to 3 move up here. This move totals approximately 3,000 points. You go from here to here, and it is approximately 3,000 points in range. I believe the next move, the next bottom that takes place, is going to be a 618% move to the upside in from this area, and it's going to target this area here. This is going to represent, if this is the low and we go no lower, this is going to represent about a 1,920 point rally in the S&P from the current lows, which will somewhere in this area will end up being the ultimate peak. Somewhere around 5550 up into maybe 5800 will be the ultimate peak up in this area. And this is going to be the end of wave 5, and then we'll start a broader rotation to the downside. But now pay attention to all of the data. My original expectations were everything would come back here to these mid-COVID levels. And I highlighted this many, many times, going all the way back to this pullback, thinking that ultimately we would come down into this area. I believe this area now is actually going to be the bottom. I think earnings are going to prompt a moderate Christmas rally here, expecting the U.S. markets to carry forward with a little bit of spending. People in America are still earning dollars. They're still spending their dollars. And I think what's really important here is the fact that we have a coalescence of support. We have the volume gap back over here in this blue line. We have this support level, this 382 support level, which is from the lows back over here all the way up to the highs back over here. And I want you to understand that this 382 level falls right in this area right here. Then we have the green support level that I highlighted at the very beginning of this, coming all the way across, highlighting this support here. And then lastly, I'll spread this out, we have this standard deviation channel, which is shown right here with these lines here. So you have the center standard deviation channel here. This is a 2-year standard deviation channel. And I want to point out that this is the center of the standard deviation channel. This is 1 standard deviation away, and this is 1.618 standard deviations away. You can see we got right above this level, stalled out, and reversed. This is the monthly chart. We're right now, right down here, down in this area. This is the bottom, 1.618 standard deviation channel. We're right down in that area right now. This highlights the fact that I believe we are near a major bottom and will change direction. Wave 4 will not occur right here. Wave 4 will likely occur up here, and will start and prompt a new market rally to the upside, possibly aligning with the start of Q4 and Q3 earnings over the next 40 to 45 days. If I am correct, the next move higher will attempt to move above this standard deviation channel here. It'll blow through this at around 37.71, correction, 37.95 roughly. Then we'll attempt to move up above the 40.50 level. And then eventually, once it gets above this level here, 41.16, then we are going to be off to the races up in this area. So understand that this becomes a support area or resistance, and this becomes resistance. The more it's able to rally and get above this middle standard deviation channel here, the more likely we're going to see some real solid upward trending. So now if I were to take a look at this on a weekly channel, let's see where we're at with this. And you can see that we are in a downward slope. We still have the critical support levels. We are below the 618 level here, 1.618 level here. We're dancing around this support channel right here. I believe this is going to be our bottom, and I believe the next rally phase is going to come back up this area, and then eventually try to break out to the upside. There will be some rotation in this process. So understand that even though I'm going to draw what I believe is likely to happen, we're more than likely going to see some sort of a movement like this on the way up, waving upward as it continues to go. So be aware. I think that earnings are going to come out. I think they're going to surprise people. I think they're going to change the market. Even if global markets enter into some sort of a crisis or contagion event, I think it's still very, very likely that the U.S. markets form some sort of an extended base through here and potentially begin to move higher. I think it's very likely at this point. I'm hesitant to actually call the bottom, so to say, simply because there's probably a 30 or 35% risk that we could see some blowout event moving it back down to my original projection. But ultimately, ladies and gentlemen, I think the U.S. market is uniquely positioned. We're not having the same issues that Europe and China and other nations are having. We've got a strong U.S. dollar. We've got a moderately strong economy. I think that earnings are going to come out this week and next week to surprise people and could actually send the U.S. markets upward, retracing all of last month's losses. We could see the U.S. markets rally from these lows. We could see it up 400 or 500 points easy over the next week. Okay, so this is your special update. We've got to pay attention to what's happening. This support level, there, like I said, there's 5 or 6 things here that are lining up right in this area. The Fibonacci areas, the support level off the green channel, the volume support level off of monthly, the standard deviation channels off of monthly. Everything is starting to line up, showing that this could become a major bottom for the U.S. markets, and we could begin a very solid Christmas rally carrying into Q1 and possibly Q2 2023. So you have been warned. Pay attention. Do not get married to the doom and gloom position yet. We don't have a lot of technical confirmation that that's happening. We're still holding up quite well overall. We just need to see how this support level plays out. I will warn you that if we get substantially below this 34, call it 3,500 level, let's just say, or a little below it, call it 3460, then we're likely going to be seeing a downward move back down here to 3,000. But as long as this 3,600 level, 3,580, 3,575 level kind of holds up right over here, then we could see a very quick change in direction, especially if earnings come in relatively strong and the economy starts performing within measured inflationary trends. All right, that's it for now. Talk to you later.